Hello everyone. Did you know some US states provide temporary income support when employees can't work due to illness, injury, or pregnancy? That program is called State Disability Insurance or SDI. Employees usually pay through payroll deductions, and eligible workers can receive partial wage replacement during recovery periods. In this video, I'll explain who pays SDI, which states have SDI versus workers' compensation, and employers' responsibility towards SDI. So let's start. State Disability Insurance is a state-run benefit program that provides temporary wages replacement benefits to employees who cannot work due to non-work related illness, injury, pregnancy, childbirth recovery, family leave in some states. This program helps employees continue receiving part of their income during temporary disability periods. Why was SDI created? The purpose of SDI is to provide financial support when employees temporarily lose income because they cannot work. Without SDI, employees may struggle financially during medical leave, families may face income problems, workers may not have paid recovery time. SDI provides partial income protection. Now, who pays for SDI? Usually, employees pay through payroll deductions. While processing your payroll, employer will withhold some of the amounts against the SDI. Employers withhold SDI tax from employee wages. Yes, mentioned this in the second point. And also employers then remit the money to the state. In some states, employers may also contribute. So if we will discuss about the states where employees mainly pay through payroll deductions, these states mostly deduct SDI from employee wages. California, employee funded only in most cases. Employer usually does not contribute to the state SDI fund. Then the second, Rhode Island, mostly employee funded. New York, employees contribute through payroll deductions. Employee mainly handle administration or insurance coverage. Now discuss about the states where employers also contribute. So the states are Hawaii, New Jersey, Puerto Rico. Next question is SDI federal or state tax? So SDI is generally a state level payroll deduction, not a federal tax. This is only called as a deduction instead of considering as federal or state tax. So this is state level payroll deduction, not a federal tax, which means not every state has SDI. Rules vary by state. Now states that commonly have SDI programs. So there are few states which have the SDI programs. Those are California, New York, New Jersey, Rhode Island, and Hawaii. Each state has different tax rates, wage limits, and benefit rules. So the tax rate for SDI is different in each state, and the wage limit is also different. In some state, the wage limit is up to 10,000 you have to pay SDI, and in another state up to 20,000 has to pay. For up to 20,000 wages will be the limit to pay SDI. So what situations are covered in SDI? Covered situations are flu or serious illness, surgery recovery, pregnancy disability, mental health condition, off-duty injury, and the not covered situations are work-related injuries, long-term permanent disability, vacation leave. If we will discuss about the difference between SDI and workers' compensation, so mainly SDI covers non-work injuries, workers' compensation cover work-related injuries. Usually employee funded, SDI is usually employee funded, and workers' compensation is usually employer funded. SDI is temporary disability support, workers' compensation is medical plus wage benefit. SDI is state disability program, workers' compensation is workplace injury insurance. For example, Employee break leg at home, so it will fall under SDI. Employee injured at construction site, it will be covered under workers' compensation. Now discuss about the difference between SDI and Medicare tax. So SDI is state program, Medicare tax is federal tax. SDI is only exists in some states. Medicare tax will applies nationwide in US. SDI is disability benefit, Medicare tax is healthcare funding. SDI is temporary wage replacement, Medicare is sports Medicare system. What happen when employee files claim? If employee become disabled, employee files SDI claim, medical proof is submitted, state reviews eligibility, approved benefits are paid. So employees usually receive partial wage replacement and weekly benefit payments. Employer responsibilities. Employers must correctly withhold SDI deductions, report wages properly, submit payroll taxes on time, maintain payroll records, provide required employee form. So this is the responsibility of employer while applying for SDI by employer. Incorrect deductions may lead to penalties. So here is a chart of current SDI rates by state. You can read out this chart. It includes California, New Jersey, Rhode Island, Hawaii, New York, Puerto Rico. So that was the end of state disability insurance video. Thanks for watching. If you found this video helpful, don't forget to like, share and subscribe to CPK Books and Accounts channel for more simple accounting and payroll explanation. Thank you so much.